So today is July 28th. It's a Thursday. Right now it's 1 p.m. in New York. I believe it's 5 p.m. in GMT. And let's first start by doing a quick sound test. Can everybody hear me? Welcome, Beres, Melissa, Mostak, Roddy, Robert, Bernard, Mohammed. Can everybody hear me? Please type in a Y or yes if you can hear me. And we will take the webinar right away. Okay, awesome. Thank you so much for your interaction. Just so you know, for you guys who are here right now, this is a live webinar. If you have any questions, definitely use your chat box to ask me questions. It's going to be 1 hour of talking about the Japanese yen and how to trade it versus its crosses. And before we start, I do want to show you a quick disclaimer that, well, as we're going to talk about Forex trading, you should understand that trading on margin, which also means leverage, can result in losses, and you should definitely get your finances checked before you start trading Forex, and you should definitely calculate your risk management based on your risk tolerance. We talk about this in great depth at investdiva.com. So if you have any questions about that, go to investdiva.com and select a private coaching session with myself. All right, today we are going to talk about, first and foremost, Bank of Japan. Japanese yen has been moving like crazy, and a lot of it is because of the anticipation of Bank of Japan rate decision, Bank of Japan policies coming up. So let me actually quickly just show you what is going on coming up in the economic calendar. If we go over here to, let's go to orbix.com. Right, and we're going to go we're looking for the economic calendar. Actually, a better way sometimes also when you're in a hurry like this, you can go to FX Street. I just want to show you what is coming up and where you can find this data, right? So actually, orbix.com get their economic calendar, I believe, from FX Street. So there is no harm in looking at that. So look at this, how much stuff we have coming out of Japan very shortly. So we have their CPI, we have their consumer price index, we have, well, year-on-year annual, they have CPI except food and energy. We have national consumer price index, and we also have, you know, the retail trade and unemployment rate. So we have a bunch of data coming up, and so so definitely we're going to see a lot of volatility in the Japanese yen crosses. And today beforehand we had some news from the U.S. as well, and yesterday we had the FOMC. So we're going to talk about that as well because, well, this is the most important one, right? Bank of Japan interest rate decision just coming up. Beginning of the next day's trading day. So this is what we're really looking at, and then we're going to look at their monetary policy statement. That is pretty essential. So what is going on? Let's go back to our presentation. All right, I'm already getting some questions. Nope, you did not miss, Tariq. We just started. All right. Welcome. So this is what's been going on in Japan. All right. So Japan, what happened is that we're going to talk about Mr. Kuroda. All right. So Mr. Kuroda, I'm sorry, no, actually, it's not Kuroda. This is wrong. Prime Minister Abe. All right. Please accept my apology over here. Abe wins, not Kuroda. Two different people, both Japanese. All right, so Mr. Abe wins. Who is Mr. Abe? Mr. Abe is Japanese Prime Minister. and he won a majority in the upper house elections earlier this month. And he pledged to do some sort of a stimulus, to bring up some sort of a stimulus package to support the economy. Japanese economy has been incredibly shaky, especially with Brexit coming up, happening, and even before that, with everything, with the Chinese scandals and all that. Well, Japanese currency has become the safe haven, and the Japanese people, the Japanese economy doesn't really like that, because Japanese economy is heavily directed by exports, and they actually prefer a weaker currency. So yesterday, Mr. Abe announced plans for a 28 trillion yen fiscal stimulus plan, but the details are still lacking. And we also need to look for the parliamentary approval of that. So this really puts the focus on the Bank of Japan decision, as well as their monetary policy possibly acting together with a fiscal stimulus to support a growth in the Japanese economy. Let me actually make sure that I'm recording the summary. Yes, I am. All right. Just wanted to make sure of that. So now, Mr. Kuroda. Mr. Kuroda, who's Mr. Kuroda? He is the Bank of Japan's governor. He is facing intense expectations for more easing in this upcoming meeting. And we are expecting actions by the bank that they could increase the purchases of ETFs. And you remember that they cut their interest rates. They're now practicing negative interest rates in Japan. So they might even do a deeper cut in their negative interest rates. But so Kuroda actually, they never used to surprise us, but now recently has become their kind of norm to surprise with some sudden actions. So we'll see what the surprise is going to be. But right now you can understand why there's so much tension in the Japanese yen process, and there could actually be a lot of opportunity to trade. All right. So this could go both ways though, because the bank might surprise us and hold back on further easing before a fiscal stimulus, because it's actually set in motion, or send a new extreme measures. And actually, we talked about this last week. Ben Bernanke visited Japan 2 weeks ago, and they were just throwing around this term helicopter money. And that basically just means extreme measures, just printing out as much money as they can just to devalue yen as much as possible. That is just, I don't know how they came up with this phrase, but this has been thrown out a lot in the past 2 weeks, which could go against the prevailing narrative, saying that the Bank of Japan is reaching their limits. With that said, the real risk might be if the Bank of Japan falls short of expectations. So right now, everybody is expecting the Bank of Japan to do something. And if they don't, that actually is a little bit riskier. So I'm going to show you that on the charts a little bit later. But so we have risks on both sides. That is why this trade, like today and tomorrow, if you don't have enough risk tolerance, I'm saying it loud and clear right now, you probably don't want to take the risk of trading Japanese yen crosses. All right, for those of you who have high risk tolerance, who have money in the bank, or all right with taking the risk, then this webinar is for you. So if you don't have the risk tolerance, some people know who I'm talking to. Don't watch this webinar because you might get tempted. All right. Yep, I'm talking to you. Yes, that's exactly true. I'm not gonna name names, but you know who you are. All right. So anyway, so we are, if the Bank of Japan doesn't act, the yen probably is gonna, is gonna go up again. It's gonna get stronger again. And if they do, there's a real risk that it falls short of expectations. Because right now the expectation is really high. They're gonna do incredible amount of stimulus or easing or whatever they have in the idea, and if they don't do it incredibly well, then again, we might not see the results that the market is expecting. All right. So that is that for the Bank of Japan upcoming fundamental views. All right, so we're still waiting on that, and these are the speculations that we just talked about. Next thing that I do want to talk about, I mean, it's not about Japanese yen, but because the first currency that I'm going to take a look at is the dollar-yen pair. Obviously, everybody here who has taken our webinars before or are Investible students, you know that when you're talking about any currency pair, whether it's Japan, dollar-yen, pound-yen, any Japanese yen crosses, you always have another currency to keep in mind. So you can't, if this webinar is called, Japanese yen crosses, I cannot just go and say, all right, I'm not going to talk about any other currency. No, because I'm going to talk about dollar yen, I am definitely going to talk about the US dollar and what went down at the FOMC press statement yesterday. And the dollar, it tanked pretty much across the board. And so let's see what happened. So the FOMC, the members mainly voted to maintain policy. So 5 FOMC meeting is down and only 3 more to go this year, right? And still the FOMC members voted to maintain the federal funds rate in a target range of 1/4 to 0.5%. As to why the Fed officials voted to keep rates steady, the Fed had this to say, so I'm quoting, the stance of monetary policy remains accommodative, thereby supporting further improvement in labor market conditions and a return to a 2% inflation. All right, but one thing that you need to realize is that the vote to maintain policy was not unanimous. So Kansas City Fed President Esther George has been the most hawkish voting FOMC member, but even she was forced to vote to keep the rate steady during the June FOMC meeting, very likely because of the incredibly dismal May NFP reports. But she flipped back on her usual hawkish self and during the recent meeting and voted for a 25% rate hike. I'm sorry, like 0.25%, right? And then if you look at the statement, like she was basically one of the main characters voting for that, but obviously didn't go through. The good news is that the overall outlook on the economy is positive. So we talked about this last week as well. Growth, in terms of growth, the Fed said that the economic activity has been expanding at a moderate rate, and the Fed expects that the U.S. economy will continue to expand at a moderate pace. I mean, this is not upbeat remarks on the expected rebound in Q2 GDP growth. So you should be careful if you're planning to trade tomorrow's advanced Q2 GDP estimate as well. So that is a different story that we're not going to talk about today, but just keep that in mind. The Fed did note that household spending has been growing strongly, which is good because consumer spending has been the backbone of the U.S. economy, and the Fed's conclusion is also the same, the one as we talked about last week. But the Fed also retained its usual statement that business fixed investment has been soft, which is not exactly a very large negative impact on the GDP growth, but persistent contractions or weak growth in business investment would have a long-term negative implications for the economy. All right, so it was just kind of it was positive in terms of growth, but like it had some sort of negative implications here and there, right? In terms of inflation, the Fed complained that the inflation has continued to run below the committee's 2% longer run objective, partly reflecting earlier declines in energy prices and in prices of non-energy imports. Market-based measures of inflation compensation remain low. That is what they say. But the Fed is also a bit optimistic since it expects the inflation to rise to 2% over the medium term because the transitory effects of the past declines in energy and import prices dissipate and the labor market strengthens further. And talking about labor market, the Fed seemed rather relieved when it said that the labor market strengthened, adding that on balance, payrolls and other labor market indicators point to some increase in labor utilization in recent months. This is to be expected, I think. After all, the minutes of the June FOMC meeting revealed that the Fed officials devoted a large chunk of their discussion on because of the bad May NFP report. And in terms of risk factors to the economy, there was in addition to the recent FOMC statement comparing to the last one, and it included this. I'm quoting, near-term risks to the economic outlook have diminished. So the FOMC members still try to balance this rather upbeat addition by saying this, that the committee continues to closely monitor inflation indicators and global economic and financial development. So they said something very optimistic, and then they're like, all right, but we need to still monitor. So as a result, they basically didn't give us any forward guidance. Given the diminishing risks in the economic outlook, the rebound in employment, the robust levels of consumer spending that would fuel the anticipated moderate pace of economic growth and expectation that inflation will steadily go higher, the Fed should have sounded a little bit more hawkish when it came to further path of monetary policy, but instead they opted to keep a neutral tone, repeating its usual line about path to tightening being a gradual one, and that their policy decisions are data dependent. And so this lack of forward guidance or lack of more hawkish tone, at least, despite the overall positive views on the economy, it kind of weakened the rate hike expectations, I think. And that is the reason why probably the U.S. dollar went down yesterday on the release of the statement. And so yeah, I mean, there's kind of a debate going on, like why weren't there more hawkish? Because at the beginning of the year we were expecting 2 interest rate hikes from the Fed by the end, and I think actually this could have to do with the American elections, because this election is becoming like a really clown show. I don't know. I do believe that we have people from out of America here. You may or may not be in the news, but I'm on a day-to-day basis on debates with people on whether or not who is going to be I think there's only one choice. I mean, the other obvious one is a non-choice for America. And I think maybe, we have all this good indications to a strong economy in the U.S., but still the Fed is hesitating to say, oh yes, we're going to definitely have another interest rate hike within this year. This could have to do with the elections because they probably want to wait and see who's going to win, because frankly, if Trump wins, I think there is no way the Fed is going to raise interest rates, because immediately, God forbid, if he does win, immediately after, we're going to increase incredible volatility in the markets. So I believe that could be the reason why the Fed is not giving us more guidance on that. All right, enough about the fundamentals. We are going to talk about the strategies from a technical point of view. We already have a little bit of an idea of what is going on economically and fundamentally. And in about 2 minutes, I'm going to show you my chart. And that 2 minutes is coming up right now. Hold on 1 second. I'm going to go to investiga.com. I know you may not be able to see. All right. We're waiting for this to load. Go to the chart. And here we go. All right. first, please let me know, do you have any questions so far? Don't forget to ask me questions, all right? I'm periodically looking at the chat box. So if you do have questions, let me know. We're not looking at the Aussie dollar, we're actually looking at dollar yen. Let's see what has been going on. All right, so this is dollar yen. This is dollar yen on the daily chart. And as you can see, well, dollar yen, it was incredibly volatile yesterday. It tested all the way back to 106.50 handle. Went back down, and today we've overall had a down day in anticipation. So this down day, so what does this mean? All right, I'm going to ask you a question. You better be able to answer. All right, so this says dollar yen. If the dollar yen is going down, what does that mean? That means that the US dollar is weak and the Japanese yen is strong. Why is the Japanese yen strong? We just talked about it because people are anticipating that the Bank of Japan is going to do something incredible to weaken the Japanese yen. So that is why the Japanese yen is getting so that there's, I'm sorry, what did I just say? Yeah. So there are a lot of anticipation, and so that's why we're seeing a lot of well, anticipation-based movement. All right. So what is going to happen? Oh, first let's do our Ichimoku, because especially with Japanese crosses, you really want to use Ichimoku cloud because a lot of Japanese people do follow this. So from a market sentiment point of view, it's a great tool. This is just a daily chart, all right? So this is the daily chart. We added the Ichimoku. How does the Ichimoku work? The moment it breaks below the Ichimoku cloud, we have a bearish signal. The moment it crosses above it, we have a bullish signal. Right now, it's just below the Ichimoku cloud. It has not been able to break above it. So to me, it's still a bearish signal on a daily chart. All right, if you actually go back to the 4-hour chart for dollar yen, we see that actually has already broken below the Ichimoku cloud, and it's a very thick upward moving Ichimoku cloud. So to me, the downward signal is already there, all right, for a short-term trading view. But as I said, though, this is very incredibly volatile times. And if you are to trade this, this is how you're going to do it, all right? You're going to trade it this short term. You're not going to trade this long term, all right? So when you're trading this short term, and we already have a bearish signal from a Japanese point of view, we already had FOMC not signaling a further rate hikes for interest rates in the U.S. We do have economic growth in the U.S. So US dollar right now is kind of neutral, right? And so it all falls down to the Japanese yen. And what's going to happen if the Japanese yen, if the Bank of Japan does not meet its expectations, does not do anything, does not create any sort of helicopter money, we could see this dollar yen pair, bam, dropping with Japanese yen getting very strong. So how low can it go? That is a question. And with that, I'm going to I'm going to take advice from my friend, Mr. Fibonacci. All right, so Mr. Fibonacci, we're going to choose, is everybody okay with the Fibonacci retracement levels? So we identify the highest trend, and we drag Mr. Fibo from the lowest low to the highest high, which is here. It only matters, the price is the only thing that matters. The date is not relevant, so you can just like drag it as long as you're keeping it within the same price range, all right? For those of you who are a little bit questioning what I just did. All right, so that's that. And guess what? Right now, the price, the exact level that it's testing is the 38% Fibonacci level. All right, so this is, again, another technical indication, in my opinion, that a bearish momentum could continue over here. All right, and for those of you who have low risk tolerance and do want to take part in this volatility, how do we choose the Fibonacci levels as targets? The first one, the 50% Fibonacci level, this first support, right? This has the lowest risk if you target this. And not only because this is the first level right after your entry point, but also because 50% Fibonacci is one of the strongest Fibonacci levels ever. So there's a good chance that we could see the pair dropping all the way down here, and we might actually see it going back up depending on the outcome. During the volatility, there is a good chance that because, well, look at this. So when we look at the Japanese data coming out, it's going to come out all the way from 10:45 GMT until, well, 12, and then the monetary policy statement, we don't know when it's going to come out. So we have a good 2-hour, well, hour window over here. I'm sorry, when does it start? Okay, no, it's a 20-minute window. We're going to see a ton of volatility. So 11:30 until 12, actually, 30-minute window, and then we don't know when the monetary policy statement is going to come out. All right, so we could very well see a volatility regardless of the outcome. And with that, there is a very good chance that we're going to see this 103.88 being tested. So this is your short-term target. Where are you going to put your stop loss for a short-term target? You're going to use the Fibonacci retracement level of 23%. You're going to loosen it up a little bit. And also with your target, it's best to loosen it up a little bit regardless of that. So since right now the Fibonacci retracement is at 103.88, I would move my target a little bit above that, loosen it up to 104. That is a little bit more risk averse. With your stop loss, this also depends on your risk tolerance. For those of you who haven't taken my course on Investiva.com, well, you should. All right, you should. Okay. So actually, let me briefly show you what I'm talking about. So if you go to Investiva.com, all right, this is Investiva.com. Right over here, this is me. Hi, hello. You go to Education, and you take the course Online Coaching by Kiana. All right, and you book your private coaching, and I can help you decide what your risk tolerance is. Well, this is all our students who said this stuff about it. We're having a sale right now. And these are all the, well, speeches I've made before. So definitely for your risk management sake, go to Investiva.com and book your coaching session with me. Anyway, so as I was saying, depending on your risk tolerance, your stop loss can be either a little bit above this 23%, but because today is a little bit more volatile, I would actually say you want to loosen it up even more. You want to loosen it up at the next resistance level, which is around here 106 or even above, just so that you don't get kicked out if something crazy happens. So regardless of your risk tolerance, I think the starting point of your stop loss could be around here. Not that. So this is when Fibonacci. I wouldn't go exact by Fibonacci. I would go. So this is our resistance, right? This is our next resistance. I would go a little bit above the next resistance, just so you're not kicked out. So you know what's going to happen. You know why I'm saying this, right? It's because. So for example, the Bank of Japan, they released their statement, and in the first glance, it kind of looks like they didn't do anything. I'm sorry, at the first glance, it looks like they did crazy, like really good stuff. So it surges, it goes up, but then you look more into it, and it could go all the way back down, and you can reach your target. So just for the sake of not getting out of your trade prematurely, because you know a ton amount of volatility is coming up, you gotta pay attention to you want to loosen up your stop loss. So we have a question. We have you have recording available for your webinar. Yes, we do, Mohammed. And Veronica asks, I hope you share views on pound yen. Yes, I will. Bear with me. We have another 30 minutes to go. So I'm going to talk about pound yen, Aussie yen, hopefully euro yen. So don't worry about it. Actually, pound yen is pretty interesting right now. So we're going to talk about that as well. So this is dollar yen. We talk about the short-term trade. All right. On the other hand, so this was a short-term risk averse, short-term, however, risk averse kind of trading strategy. You're going to grab 100 pips. You're going to get out. And if you're if you have a little bit more risk appetite, you can go with the next support level and the Fibonacci retracement at 61%, which falls on 103 and a little bit above it. So we would go with 103, let's say 179, something around this. This could be the next target. This could be the extended for people who have more risk appetite and have more, well, margin to do that. For all this, please, 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 really carefully calculate your leverage. I recommend no leverage trading. If you do want to take leverage, do not go above 2, especially in terms of volatility. It's not worth it, believe me. All right. Another question. Summary of the entry, stop loss. All right. Okay, I'll do the summary. Great question. So the summary is, I think we already have a bearish signal, and I think the first target is going to be 104, around 104, right? And the next target for people with more risk appetite is 103.100. Your stop loss, the people with the least risk appetite should be 106.700 level and above. All right, good on that? Any other questions? All right. Quickly, I do want to take a look at the monthly chart as well. So monthly, this is how it is. On the monthly, we haven't even reached HMO cloud. Okay, so that's why I'm not going to go above and beyond with the target. Our support level right now, if we do a extended Fibonacci retracement all the way from back in 2012, this massive uptrend that we had, you can see that this level that we just had the pair tested, the 100 level, this is the 50% Fibonacci level in the long run, right? So in my opinion, well, I really do believe that Bank of Japan is going to do whatever it takes for the pair not to break, to go below 100. But if it does, that is going to take the pair all the way below the HMO cloud, and then the sky is the limit. Right now, this is a very typical Fibonacci retracement scenario. What goes up must come down to the 50% Fibonacci. And this is exactly what has been happening with dollar yen. We had this uptrend, and now we've had a pullback to 50%. 50% is the most important and strongest Fibonacci retracement level. And the pair did fall, so there's a good chance also that Bank of Japan is going to do something crazy. And eventually we're going to see the dollar yen moving back up, because as you can see, the dollar, the HMO cloud on the monthly chart is actually pretty upward moving and pretty thick. So there's a good chance that we'll see that, especially if Trump is not elected. All right. Okay. Next, we're going to take a look at pound yen, because we had a request. I'm not going to say no to a request. All right. So this is the monthly chart of pound yen. We haven't talked about what has been going on in the UK. Well, today we didn't talk about it, but we talked about it extensively last month. And yeah, so they had a Brexit, and now they're dealing with it. They're trying to. They have a new prime minister, Theresa May, and coming up with from the UK, actually. Let's take a look at the economic calendar. Coming up from the UK, we have their consumer confidence actually coming up tonight as well. That is going to play a role, and so we're going to see in the month of July after Brexit how the consumer confidence has changed. And obviously, if the consumer confidence has dropped, you could see further drops in the pound. And right after that, we have the Bank of Japan data. So it's going to be volatile on the pound yen side as well. It's going to be probably even a little bit more volatile, because we are having 2 sets of data in a time span of 1 hour. All right. The rest of the week, Tomorrow we have their consumer credit. So let's see what happened before, right? Let's go to the filters and let's see in the month of July what we've been seeing from the UK. So none of this, and we only want to talk about how come I'm not finding the UK? There it is. United Kingdom. We're going to talk about their important stuff. All right, filter results. So here's what's been going on. Their PMI at the beginning of the month came, well, mixed. We had red and green. Industrial production, we had them in green, right? The vote, actually, they voted to the interest rate decision that we were expecting for them to cut the rates. Obviously didn't. I don't know why people were expecting that after Brexit. Why would they do that? And the majority, by a majority of the vote, they did not change their interest rates. So they're trying their best to bring back some sort of well, after the vote, they're trying to bring back some sort of confidence and moderation in their markets. They had a bunch of data in green, including their core consumer price index for June and the annual one for July. So these were all good for the pound, and that is a reason why we saw the overall correction of pound yen after Brexit. So we've been having a bunch of good stuff coming up, and now we're awaiting the consumer confidence and see what after Brexit the consumers now are they less confident in the UK economy. So this is actually going to be huge. So we'll be looking for that. And already talked about Japanese yen. So I'm going to refresh this. All right, Ichimoku. All right, here we are. We have another question. Do we place depending orders before the news, or we enter when the news is released? Okay, so that question that you asked, I assume that you asked about dollar yen. I believe that the signal is already out there. So the strategy that I talked about, I think you can actually do it right now. After the news is released, all right, so that is something I didn't cover. I should have. Let's go back to dollar yen. I'm sorry, Veronica, but I think this is important to talk about. So going back to dollar yen on the 4-hour chart, all right, we talked about we'll already have the signal and we're targeting 103. However, after the news, there's also a chance to talk. There are so many different ways to trade this, right? So you can either trade it now and manage your risk before the release of the news, because we already have a major technical indication, or you can wait for it. You can wait for the news, all right? So what's going to happen? So if the Japanese yen does stimulate their economy, okay, we can see a backfire. We can see a major volatility to the upside. All right. So in that case, all right, if you're trading dollar yen after the news is released, we have two scenarios. If it's better and more than what the market expected, the dollar yen is going to go up. The first, so in that case, so right now I talked about a bearish scenario. A bullish scenario, which you can trade after the news is released, is that you can go bullish and you can target either 23% Fibonacci at 105 or 107, a little bit below 107, like around here. All right. If their simulation doesn't meet expectation, or if they don't do anything, that is when you can again go back to being bearish. So if you're trading the news, if you're trading the outcome of the news, you have to wait for the result and trade accordingly. If you're trading now, right now, the speculation trading is right now, and we have a bearish signal, and we're targeting 103. All right, are we okay? Okay, hopefully I answered that question. Going back to pound yen. All right. I think I might have accidentally closed down the chat box. Hold on 1 second. We're okay? I did. All right, guys, I'm sorry. I closed down the chat box. And hopefully, if you ask another question, I can see it later. I do believe I can still see it if you answer a question. Okay. All right. Anyway, so we are in pound yen. Pound yen on the 4-hour chart, we also have a bearish signal, which is interesting. All right, because despite the fact that we've had like semi-good news, well, positive economic data, not good news, positive economic data from the UK, the pound yen has confirmed a break below the HMO cloud on the 4-hour chart. All right, so again, from a short-term point of view, this is very similar to dollar yen. Same exact kind of scenario, right? But here, not only we have to look at, so again, we're going to trade this. We can trade this before the data is released and after the data is released. Right now, I'm going to talk about how to trade it before the data is released. And we have 2 data coming up, 2 sets, right? So we first have, so this is going to be a little bit more complicated. You really have to pay attention here, all right? So we first have the UK consumer confidence. So if the UK consumer confidence comes in better than expected, the pound yen is going to go up. If it comes worse than expected, the pound yen is going to go down. Shortly after that, take notes, all right? Take notes. Shortly after that, we're going to have the dollar yen. We have the Japanese yen data. And if the Japanese stimulate or do monetary easing on their economy, or if they cut interest rates, the pound yen is going to go up. If they don't cut interest rates, if they don't do the stimulus as much as expected, the pound yen is going to go down. So there are 4 possibilities. It's very, very hard to speculate actually because there are too many scenarios at the moment. All right, so maybe actually for pound yen, it is better to wait for the data to be released and traded afterwards because this is just getting a little bit out of hand. All right, but still, it doesn't mean that we're not gonna see volatility because you know what could happen is that first we're gonna have the UK data coming better than expected, so the pound can go up, right? And then 20 minutes later, the Japanese are gonna release their data, and that is like worse than expected, and it can go back down. So there's going to be volatility regardless. So if you want to trade the news, it's got to be really, really short term, even maybe lower than 4-hour. I can't and I won't analyze the market based on the hourly chart right now because we're a little bit too early, all right, for the hourly chart analysis. But 4-hour gives us a little bit bigger version. As you can see, the pound yen has been consolidating, right? And this break below the HMO cloud, it's kind of a horizontal HMO cloud, so it's not as big of a deal as a dollar yen breakdown of the HMO cloud, all right? So that is also one thing that you want to keep in mind. And this uptrend was a little bit short-lived. So with that, we could right now, as you can see, the pound yen is actually going back up. It's going inside the HMO cloud. So it's a little bit risky to trade it now. But if you're trading now, so this is this. So we just talked about trading it now before the data is released, which I don't recommend in case of pound yen, unlike dollar yen. All right. If you're planning to trade pound yen after the data is released, okay, which is tonight or tomorrow, or immediately after, or maybe you can just wait for the markets to chill out a little bit. Maybe that also is a very good scenario that I might actually, I probably am going to trade it that way. Actually, no, I can't because I already have positions on pound yen and dollar. So I'm not going to trade that anyway. But if you are, so you can actually wait for the markets to calm down a little bit and then look for technical and fundamental. So if we do see the Japanese yen do the stimulus or cut their interest rates, the pound yen could go up. And how high can it go? I'm going to go back to the daily chart and see what our resistance levels are. What is this? Oh, sorry. My fault. On the yen daily. All right. So this is the pound yen daily. We had a massive drop. Crazy, crazy, crazy drop on Brexit. I lost money on that. I'm still in that trade. I really hope pound yen will go back up. But the matter of the fact is that it's way below the HMO cloud. It tested above the HMO cloud and it was immediately corrected after. And right now it's like way below the HMO cloud on the daily chart. We had our first indication right over here. So it's been a while. It's been over 7 months that we've been bearing this pound yen bearish momentum. And if you look at a monthly chart, also we have a bearish signal. It's very interesting because monthly chart with pound yen is actually it's already broken below the Fibonacci retracements, from this uptrend. It's already broken below the 50%. It's broken below the Ichimoku cloud. It's broken below the 61%. And right now it's testing the 23%. I'm sorry, 76%. And it's about to complete the cycle. And I have been in this trade on a bullish position since around here. I've been bullish on pound yen since here. And it's been just going down. But I have, massive risk appetite. So I'm a long-term trader. So I'm waiting for this cycle to finish up and for the pound yen to move back up. So I do think that the lowest pound yen could go. Historically, historically 118 from back in 2012 has been the lowest point for pound yen. And where it's testing it right now, this was tested back in 1995, the level that tested this month, right? And as you can see, though, here we have an indecisive candlestick. So we had a massive bearish candlestick and an indecisive from a bigger point of view. So this is for those who want to wait for the results and trade pound yen like tomorrow or even later. I would say, tomorrow is the last day of July. And next Monday, we're going to see the next monthly candlestick starting to form. And because, depending on tonight's action, this candlestick can take a different shape. Right now, it is a spinning top, which is an undecisive candlestick. And if the month of July forms a bullish candlestick, that could actually signal a bullish reversal. Because after a massive bearish, a spinning candlestick, and then a bullish candlestick, that would create what they call an evening star, which is a bullish reversal. If it doesn't, and we start the month of July with more bearish, so we're gonna see that Japan didn't do as well as they wanted, and pound and the UK doesn't print as good economic data as possible, then we could see it going further back down, which I kind of feel like it really depends on when they're going to release Article 50 in the UK. So there's a lot going on with pound yen. So I know that you asked me to cover pound yen. Pound yen is a little bit too ambiguous at the moment. All right. So from a long-term point of view, I don't even trust this Ichimoku cloud because this was not a normal market sentiment. This was a crazy market sentiment. This was a Brexit market sentiment. That's why I wouldn't trust this. And if I am to trade pound yen, I would go short term as well. All right. And the short term will pound yen is now kind of testing the HMO cloud. I'll wait for the results to come out. And as for, let me just remove this because it's getting a little bit too much. Nope. Delete. All right. So support and resistance levels for pound yen. Take notes or screenshots. We are right now around the pivot. What is this? I want a horizontal line. We are right now around the pivot. We're waiting for the pair to break below the pivot. It kind of looks like it could because it has already broken below the Ichimoku cloud. So the downward pressure is on, even though right now it's kind of retracing. All right, so within the next few hours, we're going to see the confirmation. If we see the confirmation below the HMO cloud, if we do reach 137 before the data is out, then we're going to probably see a good chance of the market to go further below. The first bearish target is the first Fibonacci retracement, not pink, but purple. And the second Fibonacci retracement, and the third is 78% Fibonacci retracement. So we have these levels to keep an eye on, all right? So how do we choose which one to target? For example, this is going to be a lot of mixes and matches. If consumer confidence from a British pound comes worse than expected, but Japan does do stimulation, this could be the target. If the consumer confidence comes in worse than expected, and Japan does the monetary policy easing, then this could be your target, a little bit lower because we have double down pound yen pressure data. Oh, I do apologize for this. Hold on one second. I have signed up before here. Hold on. Oh no. All right, I'm going to sign up then. Or I'm going to refresh. We're going to do it again. It's going to be kind of a review for you as well. So this is exactly what I did. If you want to practice it at home, we added the Ichimoku and we added the Fibonacci. And these are our levels. Our lowest support for the short-term bearish scenario is 132.50, and you want to go a little bit below it, a little bit above it, right? In terms of resistance, well, one of the first resistance is the upper band of the HMO cloud, right? So this is for those of you who have lower risk tolerance. The next resistance is right here, the top of the double top, or the top of the Fibonacci, or however you want to look at it. The next resistance, I would have to draw another Fibonacci to figure that out. The next resistance is at 50% Fibonacci level right here. All right. So, I'm sorry, yeah, resistance. So these are your stop losses accordingly. If you have more risk appetite, 143.85 could be your stop loss. This is our pivot level. Right now, we're looking for an indication in the next 4 hours. Let's see which way it goes. I highly recommend that you wait for the data to come out and then trade this. And then you can target one, if it's a bearish signal fundamentally, you can target 136 or 134.50 or 132.47, depending on your risk appetite. That is only if the fundamental data was bearish. If it is not, then it will be a reverse. It would be a bullish scenario, and exactly the opposite. 140 will be your, I would actually, if it's a bullish scenario, I would wait for a break above the Ichimoku cloud. If it does break above the Ichimoku cloud, then I would target either 142 or 143.80. All right? And this would be my support. 135 would be my support, stop loss, or 134. We have a question. Do we place opening orders before news? What happened to the question? Oh, do you have a video explain how to trade Ichimoku? Yes, I certainly do. So go to Ichimoku, go to investiva.com and go to media. And FYI, I actually have a brand new Ichimoku trading course coming up on Investiva. So definitely you can sign up. I will show you where that is later. But if you go to videos under media, okay, and I do believe I have Ichimoku somewhere here. You know what? Hold on. It's probably under all, actually. So remain under media and under Q&As. Where did that go? I'm sorry. Maybe it's here. Hold on one second. Should be somewhere around here. Okay, somebody has removed it. All right, you know what? A better way to do that is go. I'll just send you the link. How about that? Ichimoku. There you go. Ichimoku indicator. There it is. I'm gonna send you this link to all of you, so you can go. I've talked about send to all. All right. So I've talked about Ichimoku over here. So this is like very fundamental, a very basic explanation of Ichimoku Cloud. And as I said, I'm having a new education course coming up only on Ichimoku. And oh, it's not here yet, but it's coming up. So periodically, do check, do get on a waiting list for our upcoming course, so that you can get an email when I talk about the Ichimoku trading. It's really fascinating. Anyway, so we're back. Oh, also, if you want to learn more, you can also get my book. I talk about Ichimoku in detail in my book as well. This is the new edition that just came out. It's online, it's an ebook. And so, yeah, there are a lot of ways that I've talked about Ichimoku before as well. So you are very welcome. All right, so that was pound yen. Unfortunately, we don't have time to cover Aussie yen. I mean, I do want to very quickly just take a look at that. Aussie yen, also the same. All of these are crossing below the Ichimoku cloud. And I mean, between dollar yen, pound yen, and Aussie yen, I would actually go with Aussie yen because this is far below the Ichimoku. I mean, it has already the confirmation 1, 2, 3, 4, 5 candlesticks confirmation. And quickly, I'm just going to give you the support and resistance levels, right? The support and resistance levels for a bearish. This actually can trade now because it's moving up. It's actually an interesting choice with Aussie yen because it's moving up. You want to buy. You want to sell high. So it's moving up, but there's a chance that it's gonna you can get in right now. This is actually an interesting trade opportunity, and you can target 50% right over here. And the people with more risk appetite, you can target 77.24. So the first support with Aussie yen is 80, right? I'm sorry, 78. What did I just say? 78. Second support is 77.30, all right? And your stop losses, the first one is 79.60, and the next one is 81. All right, everybody took notes? Okay, so we have bearish signals across the board for Japanese yen crosses. Some are stronger than the other. This is the recap. All right, and if you are to trade it before the news is out, you want to do it really short term. You want to be bearish. Dollar yen and Aussie yen are some of the better answers. Again, these are our predictions. Please don't take me accountable if it doesn't go. That is what Forex is. You do based on what you have, but you can never predict the future. So, and that is why risk management is such an important part of Forex trading. All right. And if the Japanese yen, if the Bank of Japan cuts interest rates, if they do a crazy amount of stimulation, then you're going to change your outlook and you're going to go bullish on all of these crosses that we just talked about. All right. Thank you so much. Today was very fun. Thank you so much for participating and asking me questions. Always do that. That was great. And if you have any questions, if you have any recommendations for upcoming, for next webinars, definitely go to orbix.com, send an email to info@orbix.com. They do take recommendations. Do follow me on Twitter, Facebook, YouTube. I send out a lot of cool stuff. And buy my book. Yeah, this is a new edition. All right, guys. Thank you so much. Good luck. All right. Trade responsibly.